Welcome, I'm Caralee Angell and this is Bredt.
Welcome to our podcast. Today we have Jason Pittman with Fairway's first team, Fairway Independent Mortgage.
We're so glad you could join us today, Jason. Jason, you and I have known each other for a long time and we have done a lot of work in real estate together. When we first met, we were both working at a real estate company.
Correct.
And then how did you transfer into being a lender after that?
Good question. So actually, I started out on the real estate side. I was calling leads, and they'd gotten a little slow, and I was still competing in mixed martial arts at the time. Had my fight, and then after the fight, they were still a little slow for my services over there, so I did the exact same thing on the lending side, and started off that way until I got my license.
And you've had your license now 6 years?
Shoot. I've been going on 8 years. I think 8 years. Yeah.
8 years.
Yeah. That's been a minute.
Oh, it's been a minute. Wow. We know we're getting older when we see our kids getting older.
Yeah.
So in your field of real estate lending, how do you see people make money off of real estate or maximize their real estate potential?
I think a lot of different ways. One thing I'm seeing is the younger generation are definitely coming to the table with a lot more insight on what they want to do, not just for themselves as far as how they're living, roof over their head, but thinking ahead of time. So a lot of times when I'm seeing younger borrowers come in, they're looking at, all right, multi-unit properties per se, or they're coming in thinking, hey, I'm going to buy this property with intent of turning it into a rental and moving somewhere else. Or they have a lot of these different plans in place that I didn't necessarily see when I first got into the industry. So there's that leverage point. Or some people are just planning on buying a place and living in a few years and selling it before they move to a different state.
Do you see a lot of people investing? Not necessarily buying for themselves to live in, but for someone else to rent from them?
Yeah, not as much. Not as much in the states that I'm licensed in, but we do get that. Everyone's looking for an opportunity to take advantage of real estate. It is proven to be the kind of the pound for pound champ, if you will, as far as investments.
Yeah, it's a good way to get ahead.
Yeah, without a doubt.
So do you have any advice for our viewers who are considering to buy real estate using financing?
Yeah, there's a lot of things. I would say, for one, it's never too early to look at your situation. Talk to someone like myself, just kind of to see where you stand. We're looking at credit. What is your credit situation like? What's your income like? What are your cash reserves like? All those type of things. Too many times I see people who are easily swayed by people who aren't in the industry, like myself or you guys, and they heard this old wives' tale that they think they need $100,000 or they need a 820 credit score, all these different things. And the easiest thing is to get out and have that conversation, and then from there just kind of start figuring out what things you need to do. If it's credit, get right on it. Credit takes a little bit of time to heal. If there's some, scarring there, if you will, if it's just not making enough income, there's strategies as far as that goes. Sometimes it might be, give up that cushy, fun job that you like to get, to a better job to where you can bring in more income. Sometimes we're waiting for that second job. A lot of people don't know, if you are working 2 jobs, you need to have worked both jobs simultaneously for 2 years to use all that income. If it's cash that you need, there's other resources there as well. A lot of people don't know that they can tap into their 401ks and retirement vehicles. So a lot of different things that can be used to get someone into this space, but it starts with a simple call.
So you're available if our viewers have questions about their credit or how much they're earning.
Most definitely.
They can call you.
Most definitely.
So we'll make sure your phone number's up on the screen.
Yeah. Well, I tell my clients, like, 80% of the people that I talk to aren't ready the first time that we talk, and that's fine. We'll put a plan in place together for you, and we'll get you where you want to be.
And one thing I have noticed about working with you, Jason, it's you give you give the client a deadline, and at the deadline you check and make sure they did it. And a lot of lenders, I know, they just forget or they won't check in, but you check in, and if you can't get a hold of them, you call me. Whenever I see Jason calling, I'm like, I need to take this. He's asking an important question.
It is true, but I mean, we can't want it more than the client does. Even though we want to see good things happen for them, if the client's not motivated. So those deadlines are important, just to kind of check in. And sometimes people, life happens. We all get busy, kids, work, you name it. And it's good for me to follow up in a couple weeks, especially when we're talking about credit things where it takes a little bit longer. Or sometimes people forget, if you're bringing in a co-borrower and you don't really know how to explain this situation to the co-borrower, well, I mean, I can do that too. And a lot of times I recommend that in those situations.
Better that you can explain than they explain something they don't really understand.
Exactly.
Well, if somebody came up to you today and said, today is end of March 2023.
Yeah.
Say, hey, Pittman, do I wait till next year to get into my first house, or do I go today even though the interest rates seem to be a little bit high and I've heard they might be coming down? What's your take on that?
It's an awesome question, and that is the conversation I have with everybody on a dang near daily basis. A lot of people who weren't in this market or in this space like we have been don't really understand that, yeah, rates might have been cheaper a year or so ago and prior to that time. But at the same time, people were basically cutting off their left arm to get into a property, right? You had situations where there's always multiple offers. I had clients that were constantly getting discouraged. My first time home buyers, my move up buyers, my move down buyers, it didn't really matter. Everyone was getting outbid, getting discouraged. It didn't really matter the price point either. And it didn't really matter how much further they were going over asking price. It seemed like people were constantly getting outbid. If they did get their offer accepted, they were getting their offer accepted because maybe they came $50,000 to $70,000 over asking. They waived their home inspection. Maybe they had a $30,000 to $40,000 appraisal gap in case the property didn't appraise. Maybe they also agreed to let the seller live there for 2 more months. I mean, the list went on and on and on of things. So to answer your question, now is a good time because right now you're not seeing those competitive situations. I use the shoe sneaker analogy. I mean, if I got one pair of Michael Jordan shoes, I mean, I'm going to be able to up the prices quite a bit, but I got a ton of them out there. Well, then there's plenty of selection. There's plenty of opportunity for people to go in and get their, take their time and shop and see what they want. But we're down to 2 or 3 pair. Well, 20 people are going to bid those shoes up until they're willing to get those. Same thing's happening when it comes to real estate, and I think that's the biggest misconception right now is that people who weren't in the industry don't realize how chaotic it was, how frustrated clients were when they did everything they were supposed to do. People I've been working with for 2 to 3 years, getting their credit right, they saved their money. Maybe he was waiting for his wife to get back to work. Maybe she was waiting for her husband to get his degree from school and get to work in, or whatever the situation may be. They did all the right things and they were still not getting their offer accepted because it was a freaking madhouse. And that's not happening right now, and it's imperative that people understand that. If you get in right now where the rate's a little higher, so what? You know what you can do? You can refinance. So that's my take on that.
So I have heard people say date the rate, marry the house.
Correct.
So date the rate meaning you can get a new rate.
You can get a new rate. I mean, depending on the loan program that you're in, there's ways around it. After, obviously, you have to be in your property for X amount of time, but it kind of depends on the loan program you're in and obviously what rates are doing. But you're not going to be, I can assure you, you're not going to be in your rate for 30 years. I mean, I've been in my house, we're in now for 5 years, and we've already refinanced a couple of times, so it happens pretty quick.
That's true. We've already refinanced once. Well, Frank was in charge of that.
Well, and we all know that I think the other thing with first-time home buyers is people don't appreciate how quick 1 year or 6 months or 2 years can go by. But you think about other aspects of your life, or go to social media, you're like, oh my gosh, that was already 2 years ago? That felt like it was 6 months ago.
Yeah.
I do that all the time. And that's the same thing happens. You buy a house and time passes. And, before you know it, you're in a position to, take advantage of whatever the rate would be. Maybe take advantage of some of your equity position. You got these trips that you wanted to do. Oh, you know what? Let's take some money out in the home equity line of credit. Let's cash out. Or maybe you're moving to a different state and now you're up 6 figures just because you decided to buy a house in 2023.
Yeah.
There's a million different things you can do. And one thing I'd tell you about rate is when you're renting, your rate's 100%.
Wow.
That's all I'm saying.
Last year, I think the rates for renting went up 11% in the Portland metro area. You can't control that.
Can't control it. The other thing that I'm constantly hearing is people's actual rent they're paying. I have had, in the past 3 weeks, there's probably been 4 different groups of people who told me they're paying $2,500 or more for rent per month, and that's a lot. I look at, our houses, I think we're a little under 3,000 square feet, and that's nowhere near what we're paying in our mortgage. So, what are people waiting for? It's not getting any better. It's not getting any cheaper. In the 8 years I've been in this industry, anybody who's waited for whatever their reason was, because they had to or because they thought they should, no one has felt like that served them well waiting. You know what I mean? They're like, oh my gosh, I should have bought. If I would have bought last year, it was every year we've seen, it's like every 6 months it goes up like $50,000, I feel like, or something. There's something always constantly happen where it's not advantageous at all to wait, and get in the game, get your equity built up, get your tax write-offs, get all those things going in your favor. All things you can't have when you rent.
Amen. So reach out to Jason with your lending questions. Reach out to Bredt and me with your real estate questions. And any last advice, Jason?
No, just get in and like I said before, check on your situation. You know what I mean? It's not going to start until you start. You got to go and see where you stand.
Cool. Thanks for joining us today.
Thanks for having me.
Thanks for joining us. Thanks for tuning in, everybody.